Good afternoon, traders. This is Christian from Tribeca Trading Group, and this is your market recap for Monday, December 9th. And the risk disclaimers in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So, a little bit more red on the screen today, particularly in the momentum names today. So I think probably the theme of today's video, and I know Jim Cramer says this, and I know some people really hate Jim Cramer, some people like Jim Cramer. But the one of these sayings, and I pull sayings from all different types of people and so forth. But I don't know if this is his saying or someone else came up with this. But bulls make money, bears make money, and pigs get slaughtered. Certain momentum names over the last couple of weeks have just been flying, and it's one of those situations where they're eventually going to pull back and things are going to reset. And that's just normal. We've also had some mechanical, moves into, as we get closer to quadruple witching, which is not this Friday, but next Friday. There's going to be some buying and some mechanical flows like that. Please don't read too much and to think that that this is it's monthly options expiration. No, I mean, I think it's just a bit of profit taking, right? Funds, there's a whole bunch of different players in the market, and when things go up and when certain groups and sectors get really overbought, such as what tech and consumer discretionary have been doing recently, people are going to take profits and they're going and then they're going to rotate into some other things, or they're going to go to the sidelines a little bit. This is what happens over and over and over. And if you've been around in the markets, don't let some of these guys on Twitter try to fool you with, oh, this is what it's going to be. Like, it's just very simple. It's, things go up and people take profits and they move to the sidelines, or they just move to something else. And I think too, there was a bit of a grab for the China market today too, and that also becomes a momentum market too, and it's profit taking in one group and going into a little bit of the other. So let's talk about, so that's the main thing. I wouldn't overthink it. I always get the question when this happens that is this going to be a sustained pullback, or, is the top in for the year? And, first of all, like, I don't have the answers to any of those questions. And you've got to be, like, in my opinion, I'm not giving out any advice or recommendations, of course, but just be a little bit patient. Like, if you've been doing this for a while, you actually like these little bit of pullbacks, because when sediment, you don't, like, in my opinion, you don't want to be buying things when the sediment is, super, super hot in momentum areas and in growth areas. You want things to kind of come in a little bit, right? Because it kind of resets things, right? The VIX, I think, got below 13 last week. And again, I'm not really using that as a contrarian indicator, but, you could kind of say things are pretty euphoric, right? You can insert that word today too. And I was listening to Michael Santoli on CNBC just talking about that too. He mentioned, like, over the weekend, probably, some fund managers saw, what has happened recently in the in the last couple of weeks, and probably said, "Hey, I'm gonna ring the register today." So, looking at SPY, so we lost the 5-period moving average. If you read my midday notes in Substack, you know that I talk a lot once we've been, price has been trending above this 5-period moving average since basically the middle of November. I think it got above it here on November 20th, right? And then has stayed above here for the last couple of weeks. So this is the first day that we're kind of coming in here. Now, oh my God, is that the end of that's it, that the rally's over? We had one pullback day. No, I wouldn't get that dramatic, because we have support here, right? Notice I've got this trend line drawn here too. So we could come in and back check this, right? This is only, by the way, a 0.5% lower, right? And so this is right around 602. So that's a level that I would be watching on the downside. All right. And notice that we're also, like, almost down to the bottom of the value area for the week, right? So again, this value area up here, you could see two value areas on your screen because I have multiple studies on here. Same indicator, but different time frames. But this is the 1-hour chart, and here's your support in the short term. So this is based on all of last week's activity. right? And a standard deviation around that. And then your next level down of support is, as I just mentioned, down at the 602 level in SPY. So then we just kind of see, right? And then we see if that's enough to kind of shake things out a little bit. Oh, Eli Lilly just announced a $15 billion buyback program. All right, and looking at the Qs did not break the 5 pair moving average, but testing. Um, they have been a bit more, they had huge momentum. Remember, the Qs were up last week, I think 3.3%. So giving back about 0.8 of a percentage point, like again, it isn't the end of the world. Um, so again, we'll see. I don't know if we stop at the 5 pair moving average. We're kind of a little bit in no man's land. Right. I know that's not what people want. Like people think that there's folks that can just come out and predict markets on a day to day. What they do is they're really good salesmen and they say very, very general things. Oh, so I could do that too. Oh, I wouldn't be surprised if we go down to the bottom of the value area. That's down 1.2% away. And honestly, like so that's why like I don't know if there's a great trade here yet. I think you have to be paying for me. I'll stop joking around, but I see this stuff all the time. Like if sometimes when it's boring, like on a day like this, I said, after the first couple hours, I was like, I'm probably not going to do much today. So you kind of sit and you watch the tape and you watch how it goes and you read Twitter for a little bit, and then you just kind of shake your head at some at some of the things people say. But I get it. They're selling. They're great salespeople. So that's what they're doing. But yeah, I mean, I see support. So this is why like I'm not buying the dip yet. I want to see how this plays out. Because I know we've got support 1.2% away, and we're also inside the value area for the week. And the other thing too with the Qs is that we had this huge week last week. It's okay for this to go sideways for a little bit, right? I thought that we might see IWM get going this week, but you kind of reassess as you go along. Notice we got to the top of the value area for the day, right? And because IWM was rallying into the open this morning, and then got rejected at the top of the value area. So right where it could have turned, it got rejected. So again, what does this tell me? It tells me to kind of just sit on my hands for a little while, right? And what did I do today? I was a net seller. Like I just saw the writing on the wall. Like once I started to see things, like I was long Tesla coming into today, and I took a target right at that 400 level, and then I just watched how this was going. And once we started to dive like this, I'm like, okay, it's either one of two things are going to happen. Like it's going to just continue to go higher and it's going to push through those previous highs, which you could see I've got a dotted line there, right? And that's why I don't know, you take a target and then you watch to see what happens, pulls back a little bit, and that's good. I'm out for now. Let's let it reset again. Right? Could it push higher? Sure, it could. But notice you also have like a little bit of a divergence here in the RSI, where here was when the RSI was close to like, made, wasn't as high as this level. But so again, like these bearish divergences in the RSI like aren't the best signals. They don't work all the time. But it's like, again, how much are you looking for? Right. And in the short term, like I just know these prices will come back. And I've been in and out of Tesla a few times. I've tried Tesla. I was long Tesla a couple weeks back. Right, and I can show you this too. All right, here's my trading blotter. Again, many folks won't do this, but I do it because, I'm a trader, right? I'm not I'm not doing what these other people on Twitter do. But and not every entry and exit is perfect, and that's why I'm showing you this. But I think I got back in this on November 29th. Again, like I do like to rehash things a little bit just to make sure I'm doing the appropriate things. But I think off of this VPOC down here, right? Because I went long here, took a couple targets. I thought this VPOC was going to get taken out. I took a couple targets here, and then I got out of it. And I think that was like right around the 24th. Again, I don't want to waste your time going through all of this, but exit. Yeah, on the 25th, and then I got right back in at a lower price on the 29th, right? I know a lot of people say, oh, there's all this call buying and so forth. Again, it's just one of the factors, right? You got to remember too, again, I'm not harping on option activity because it really helped me out in the China trade, which I'll talk about in a minute. But so have to remember there's other forces out there, right? What if one person is buying calls and three big funds are dumping Tesla, right? You can't, like, just looking at one thing in isolation is really nice, and neat when you see calls on the tape. But you have to understand that there's many other factors in play. There's many other holders of the stock besides one individual call buyer, right? And sometimes the call buyers know something and sometimes they don't. But this is the edge that you could also get, by the way, when you're looking at overall. Like, to me, I look at volume at price because it covers all of it, right? I do look at option activity too, because it will give you sometimes a little bit of a clue. But for me, like, coming out and this, taking out this downside VPOC was like, hey, okay, maybe somebody was selling it this day, right? And I went ahead and bought the dip here, and then sold the rip. So I'll be back in this name. I probably will just try to let it cool down a little bit, right? And that's just the name of the game, rinse and repeat. Also, before I get to talking about China, right? And by the way, here's my trade blotter too, so you could see for today what I did. And why, always my thoughts on days like this where you kind of get reversals and things. Like, so for example, like, I'm not in Palantir in my trading account. I do own some of the TTG trend portfolio, but this is a bearish engulfing candle. Now, it's still holding the 5-period moving average, but that's a pretty ugly looking candle for the day. So again, do I know if Palantir is going to go down tomorrow? No, I don't. But I would think, everything is about probabilities. I would think after that type of reversal, yeah, you could see some downside, but it's got to break that 5-period moving average, because we could see a lot of ugly looking candles and you don't get that price action right away. Look at this one, for example. This is MSTR. When I talked about this, I think on Friday, I don't know if I talked about it in Friday's video because I can't remember, but I talked about how the 20-day moving average was important because, again, this could be considered a blow off top. You just don't know if until it starts to really break the moving averages. This breaking the 20-day moving average tells me it's probably the up move is probably done for a little while, and that could be the top for MSTR for a while. Let's see if it can get, so here's the difference between like being a disciplined trader and not, right? Some traders, like, maybe they bought in here, they're afraid. They're so afraid to hit the sell button that they don't do it, and now they're living in hopes and dreams. A disciplined trader would say, hey, this thing has been honoring its 20-day moving average for a long time. So even though this got very messy up here, right, this is a change in character to break its 20-day moving average, right? And normally for something that's been in an uptrend for a while, I get out on the 20-day moving average. Now, again, I don't have a position in this, but I've been watching this, right? But that's a break of the 20-day moving average. That's a no-no. It's, especially something that's been in a trend for a while. So, so what do you do? So, like, oh my God, like, well, I'm going to miss a big move to the upside. Then you set a new alert and you set it probably above the 5 in the 20-day moving average, probably around 394. Because if your thinking is that this thing is going to continue to make new highs and trend and go higher and higher, then what do you care about a few points from here to there? What you're doing by getting out of a position at the 20-day moving average of something, again, that's been above the 20-day moving average for a while, is you're becoming what's known as a risk manager. And that's so much better than, if you could separate yourself, and have rules like this, then you could save yourself, and out of a lot of positions, because who's to say that this can't break down all the way down, which is another 15% lower, down to the bottom of the value area for the month of December, which is where I see the next support. All right. So it's very important to kind of to understand these things. All right, China. So as I had said last week, I did a like a 15-minute video about all the China flows and YINN and CHAU. I talked about, the charts and, how you could use the option flow, and you could pick whatever you want, basically. Right. And I saw people doing that today. They're like, oh, well, look at the BABA flow, or look at the JD.com flow, or look at the TIGR flow. Hey, they're all in the KWEB ETF, right? You don't need to spread your chips around, like, this, basically the same thing. Right. They're all going to move. So, you could try to extract a little bit of alpha between picking a Futu versus picking a Neo, but they're all going to be correlated, and they're all going to do the same thing. I said this, and again, like, you could read the tape and say, oh my God, there's calls in BABA, there's calls in this name. Okay, they're all going to move with KWEB and the ETF. I know that's not as sexy as picking all those individual names out, but it's going to move the same way. And because if there is going to be another big round of China stimulus, do you really think it matters that much if you're holding Futu or if you're holding what's the other one? BEKE or any of these names? Or just simply going long the KWEB ETF? Right. So I mentioned I would show the blotter of everything that I did today, but I missed a couple trades in the morning. But notice sell, 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 exit, 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 exit. I took one entry today. And I also added back Snowflake because I took that one off earlier in the day. But this is just risk management because what I said to members on Friday, and we had a Q&A session too. This is why sometimes I can't remember if I say things in the end of day video or if we had a Q&A session at 1 o'clock last week. And I said, if the momentum comes out of the market, right? Don't be one of these people who don't hit the sell button and they hold or they keep adding and they keep adding. I have encountered, I've been training traders for a long time, and I always will have a new trader. And again, I'm not saying that this happens this time around, but after like a couple days of like where the momentum falls, comes out of the market, they're like, hey, I just gave back like 2 months of profits. And I'm like, what? I'm like, how the hell did you do that? And it's because folks just they don't want to sell and they get very greedy. They don't understand that the market goes up and the market goes down. And again, if the more that you have experience in this game, you're actually welcoming some of those dips because those are good buying opportunities. But I've always come to terms that if I'm riding the trend, right? And we talked about this with SPY, same thing with the Qs staying, being above the 5 period moving average. Well, there's a little bit of a dip here, but it was cleaner with a SPY. But being over the 5 period moving average, 20 period moving average for 2, 3 weeks, and then one day where there's give back, it's okay to give back some of those, give back a little bit of those profits. It's just trading 101. But again, folks, what happens is, because my stock account is down today. My option account, which is where I was holding the all of the KWEB calls, uh, is up nicely today. So, I report for the US Investment Championship. I only next year I might change it, but I'm only doing my stock trading, no options. So I don't get the benefit of what I made in options today in that contest, but that's okay. But I did lose money in my stock account today, but it's just one day. It's not really a big deal. Again, newer traders, younger traders, they're afraid to lose money any day. They can't put the pieces together that say, hey, they've made money for 2 weeks and they're going to give back a little bit once the market turns a little bit. But again, this comes with being a little bit more secure about what you're doing and understanding how the market works. All right, so just that's a lot about today. And yeah, I don't have the answer of like I saw somebody just ask me on Twitter a second ago, do you think they're going to come out and buy the dip? I mean, give it a chance to have a dip, you know, in some things. Like today was a reversal day, right? For example, like I mentioned, the small cap started the day up 1% and finished down 0.5%. Would it be logical that we get follow through to the downside tomorrow? Sure. And then maybe buyers come in, buyers could step in for that. You got to remember too, we're also still in a strong seasonal month. So that's why I err on the side of that the dips will probably be shallow. But again, I wouldn't mind down 1.8%. This should shake things up and reset the super hot sediment that we have right now, and then go from there. All right. One other I was going to show you because I begin to kind of look for some setups and different things besides just tech and communications had a big reversal day. Again, this ETF was going, bonkers. Consumer discretionary, right, is another one too. Like, still, would I buy consumer discretionary stocks right here? No, because I think they're still overbought, right? Even though they're still above the 5 period moving average, like I'm not buying consumer discretionary up here, right? This needs to come in a little bit and reset itself like this, right? Look at this, break higher, spend about a week going sideways, and then boom, back up to the upside. Don't you want to see that versus trying to buy something up here still? Like, and again, notice this had a gap up, right? Came in a little bit. So again, this reversal day that it had here, no, this wasn't a reversal day, I guess, but maybe just a sell-off day. But it didn't get immediately bought. It went sideways and then it ramped higher. So be patient, right? That's the hardest thing for people to do these days because there's so much immediate gratification that people want, but let things set up a bit, right? One name I'm watching, I went through some charts. I like Deer here, but Deer did not retake its five-period moving average, right? So again, this nice break higher, 4 or 5 days of downward price action, and let's see if we can get into its value area for the week. Right, that's right around 452. All right, guys, so that's it. I'm very glad that I had a lot of people tell me about that that the China stuff really worked out for them. It worked out for me. What I did was I took off my short-term calls in January because again, there's going to be big theta decay on that. Once you get closer and closer to that expiration, and what I did is I rolled a third of the position. So again, locked in a good amount of profits, and then I rolled the remaining position out to March 36. And those calls are down already. So I think I did the right thing with taking profits. You can kind of see what I did right here. Here's my position. So again, you want to know what my position is. This is what I did. But I took profits 240, 260, 270. And then took the last portion off for 320, which I think was very close to the high of the day, right? Because again, you don't know how high, so that's what I do. I basically, just take targets, little by little, especially in the beginning of the day. The options are a bit wide, so it's tough to kind of get out of there. But yeah, I mean, I'm not gonna. Another phrase too is what? Don't I can't think of the right expression, or I'm not going to say it right, so I'm going to skip it. But anyway, that's it. Again, don't again, I don't have the right phrase, but profits are profits. You come in one day and something's up 10%, right? That's a gift, right? So in any event, have a great night, everybody. See you tomorrow.